currency adjusted, it's higher than the spending America did in World War II, when we were at full war, in a full emergency. So whether it was the COVID hysteria or the Second World War, we are spending, deficit spending, debt spending, higher than we were during a war. Like, it's a major crisis. But what's the crisis? It certainly can't solve all the political problems in the world. It can't save our central bankers or our politicians, left or right, from making promises that they certainly can't pay for without debasing the currency.
You're watching Silver News Daily. Subscribe for more.
Silver is standing at the edge of a financial earthquake, and almost no one sees it coming. The warning signs are everywhere: rising debt, relentless money printing, inflation spiraling out of control. But the mainstream media is too busy focusing on distractions to tell you what's really happening. Governments are trapped in a cycle of unsustainable borrowing, central banks are losing their grip, and faith in fiat currency is eroding faster than ever before. And when that faith is gone, history tells us exactly what happens next. A flight to real, hard assets, and silver is poised to explode. Matthew Piepenburg, one of the most respected voices in macroeconomics, isn't mincing words. He believes we're facing the mother of all financial collapses, and when the dust settles, those who understand silver's role in this crisis could be the ones who come out ahead. But here's the catch: most people won't see it coming until it's too late. Think back to 2008. Before the crash, everything seemed us. The markets were booming, real estate was soaring, and Wall Street was reassuring everyone that the economy was strong. Then, seemingly overnight, the entire system cracked wide open. Those who were prepared? They saw life-changing gains. Those who weren't? They lost everything. The same setup is happening right now, but this time the stakes are even higher. So why is silver the key to surviving what's coming? And what forces are about to drive it into a once-in-a-lifetime rally? Stay with me, because by the end of this, you'll understand why silver isn't just an investment. It's a necessity.
The market is driven by central bank support, liquidity. Liquidity is the grease and the oil in the engine. As long as it's there, markets will rise. It has nothing to do with how intelligent you are at Wall Street, or what MBA program you came from, or what suit you wear, or what address you have in Manhattan. It's just being at the right place at the right time. It's been supported by the Fed for a generation. A generation that's forgotten what inflation really does, what debt really does, and doesn't really care. So stocks are scary. You can look at all types of indicators in all types of ways. I look at the S&P, the currency and issue, or you can look at the famous Buffett indicator, which is the market cap of the S&P relative to GDP. It's at all-time highs. It's over 200%. By just the forces of gravity alone, we will see the most ignored rule in Wall Street, which is mean reversion. The very weight of that bubble will eventually, inevitably collapse when the Fed can no longer sustain this fiction. I can talk about the signals for that if we have time afterwards. It's really not that hard. Meanwhile, in the bond market, the so-called risk-free return of the most important treasury bond or government bond in the world, for the last 5 years, when adjusted for inflation, gives you nothing. It gives you a negative return. It's return-free risk. And yet that's the U.S. Treasury, the U.S. 10-year, the Tier 1 asset the Bank of International Settlement asks you to go to for safety. Now, that market ball is followed by another ball, which we can all debate, inflation, deflation. It's not really a debate of either or. It's cyclical. They follow each other. There's all types of conversations now about what's causing inflation. Is it supply shocks? Will Trump's Department of Government efficiency and layoffs lead to more inflation? Will mass deportation of immigrants be more inflationary? Will tariffs, of course, be more inflationary? We could argue this all day, and it certainly will be inflation, but the rule of cause of inflation is very simple. Inflation comes from debt. Debt is the thing that matters, and you pay for that debt when you don't get it through tax receipts and GDP, productivity, manufacturing. You get it by mouse-clicking zeros onto the balance sheet of the Fed and expanding the money supply. And the money supply has gone up 5 times in the last 20 years. That, ladies and gentlemen, is why we have inflation in the U.S. and why other central banks, again, the dog being wagged by the tail of the Fed, has a similar policy. We've had 60 rate cuts in the last year alone by central banks around the world. They're all desperately following the American lead. So when you have inflation, that leads to the next ball that we can see as we're running down that freaking polo field. And that's currency. Currency is a currency risk. When you add a bucket of water to a glass of wine, I've said this so many times, what does it do to the flavor of the wine? It dilutes it. When you add trillions and trillions of fake liquidity, mouse clipped out of thin air, the central bank near you, it's the law of simple common sense that's going to eventually, over time, dilute the purchasing power of your currency. That inflation,
The global economy is drowning in debt, and no one has a way out. Governments, corporations, and even everyday consumers have been living on borrowed money for decades, creating a bubble so massive that it makes 2008 look like a minor setback. The numbers are staggering. Over $300 trillion in global debt, a figure so large it can never be repaid. Instead of fixing the problem, central banks have done the only thing they know how to do: print more money and kick the can down the road. But that road has now hit a dead end. History has shown us time and time again that debt crises don't just fade away, they end in disaster. When debt reaches unsustainable levels, two things happen. Either massive defaults shake the financial system to its core, or governments turn to their last desperate tool: monetary debasement. And we're already seeing it unfold. Central banks are trapped. They can't raise interest rates high enough to tame inflation without crashing the entire economy, but they also can't keep printing money without turning their currencies into worthless paper. And that's exactly why silver is about to shine. During every major debt crisis in history, when confidence in fiat currency crumbles, investors rush into real assets, gold, and more importantly, silver. Just look at what happened during the 1970s stagflation crisis. The US was drowning in debt, inflation was raging, and silver surged over 1,000%, skyrocketing from $1.50s to nearly $50 per ounce. In 2008, as the banking system collapsed under the weight of bad debt, silver soared again, climbing from $9 to almost $50 in just a few years. Now we're facing something even bigger: a global debt bomb that's ready to explode. And when it does, the rush into hard assets will be unlike anything we've ever seen. The question isn't if this crisis will happen, it's how much time we have left before it hits. And the signs are already flashing red. But debt isn't the only factor driving silver's coming breakout, because once debt spirals out of control, inflation always follows. And this time, it's not just creeping up, it's running wild.
Regardless of your income, you can all afford an ounce, a gram of gold, and you should. And when it comes to not just understanding why you should have gold, but we as bond graders understand very clearly is how you should own it. And one thing you should not do is keep it in the very banking system that you're trying to avoid the risk of. That includes paper gold, ETFs. It's just a daisy chain of intermediary banks. If you want to hold gold to be free of the system, of the digitalized blockchain mutable ledgers that's coming, you gotta have your one real asset, physical gold, outside of that banking system. And you wanna have it, I think, in a jurisdiction that actually sees gold as a protected asset, and on a relative, not absolute basis, actually protects your privacy. Switzerland has some problems, but on a relative basis, there's no better jurisdiction in the world for that type of ticket, that type of purchase. Insurance matters, we're insured through Lloyd's. Logistics matter, being able to move that gold from anywhere in the world, whether you're buying or selling, whether you're in Australia or whether you're in Rhode Island. And of course, liquidity matters, and we have an in-house trading desk that gives you instant liquidity and wires in any currency you want to any bank account you want when you need it. But like central banks of the world, you save in gold and you spend in fiat. And then, of course, there's the service. Our team, two of us are former bankers. We know how the banking system works. We know how the sausage is made. Actually, three of us, of our partners, are former bankers. Four, when you really add it up. So it's not just why you should own gold, it's how you should own gold. And for the larger tickets, we're there, but you don't have to go to Switzerland with a $5 million minimum or $400,000 minimum to figure out how to hold your physical gold outside of the banking system. Because gold is the direction, not just tomorrow, already yesterday and today. That backswing has started. The ball direction is obvious, whether it be the markets, the economy, the debt, the geopolitics, and the currencies, which are open and obvious. It's not even gold bugging, folks. It's just common sense. And I hope this gave you more conviction not to speculate in gold, but to believe in gold. Because it is a...
Inflation isn't just a temporary spike. It's an accelerating catastrophe. The governments and central banks of the world have flooded the system with cheap money for years, convincing everyone that inflation was under control. But now, the illusion is crumbling. Prices are rising faster than wages, the cost of living is spiraling out of reach, and every fiat currency on the planet is losing its purchasing power at an alarming rate. This isn't a coincidence. It's the direct result of decades of reckless monetary policy, and there's no way to stop what comes next. Hyperinflation. Hyperinflation has happened before, and every time, it has wiped out entire economies. In Weimar Germany, Venezuela, Zimbabwe, each time, governments tried to print their way out of debt, and the result was the same: a total collapse in currency value. People who had worked their entire lives to save a save in their local currency were left with nothing. And what survived? Nesa Sibirnahad. Silver and gold. Those who held real assets were able to preserve their wealth while everyone else watched their savings evaporate. Look at what's happening today. The US dollar, the euro, the yen, currencies that once seemed invincible, are all losing purchasing power faster than at any time in recent history. The official inflation numbers are bad enough, but the real inflation rate, the one people feel in their grocery bills, rent, and daily expenses, is much worse. And yet, central banks continue to print. They tell the public inflation is under control, while behind closed doors, they prepare for more bailouts, more stimulus, and more money printing to prop up the collapsing system. Silver thrives in this environment because, unlike fiat money, it can't be printed into oblivion. It has intrinsic value, it has industrial demand, and it has a history of outperforming during inflationary crises. In the 1970s, as inflation soared, silver exploded in value. In the early 2000s, as monetary policy loosened again, silver surged from under $5 to nearly $50, and now, with inflation spiraling out of control and global debt hitting record highs, we're about to see silver's most dramatic breakout yet. But here's the thing. Silver isn't just valuable because of inflation. There's another key metric that tells us silver is wildly undervalued right now, and when this metric corrects, silver's price will go vertical. It's called the gold-to-silver ratio, and right now it's flashing one of the biggest buy signals in history.
Selfish and supportive, and markets go down when the central banks are cornered and hawkish. That's a gross simplification. But when you've got years and years of the Fed expanding its balance sheet by trillions, that goes directly into inflating the stock and bond market, which is why guys like me in their 20s were getting overpaid to basically sit there and ride the tide and pretend that that's intelligence. But I was there, I saw it, it was a lottery, we knew it. Hopefully we were humble enough to accept it. But meanwhile, on Main Street, we see a very different story. And this is the Main Street that I came from. And this is where there isn't support or socialism from the Fed. This is where it's every man and woman for themselves. And when my grandfather came out of World War II, the greatest generation, and worked at Ford in Detroit as an executive, the ratio of management to median employee salary was 15 to 1. In the 70s, by the time I was born, it was about 32 to 1. And by the time I got to the dot-com bubble and the Wall Street nonsense, it was 320 to 1. Again, I'm a capitalist. I'm all in favor of getting reward for your risk or your luck or your opportunity, but there's something pathological about that type of wealth inequality directly related to central bank policy. Now, in the case of Jeff Bezos, the ratio isn't 320 to 1 per median employee. It's 1.2 million to 1. Again, Amazon's a great company, Bezos is a great capitalist, whatever you think of it, but that seems almost not capitalism. That seems like feudalism. A land in the system is based on an extraordinary, historically unprecedented wealth inequality. Which leads us to another ball I'm tracking, besides the fake economy and the feudalism. It's the market. Again,
the gold-to-silver ratio is one of the most powerful indicators in the precious metals market, and right now, it's flashing a historic buy signal for silver. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold, and historically, whenever this number gets too high, silver goes on an absolute tear. Let's break it down. For most of history, the gold-to-silver ratio hovered around 16.1, reflecting the natural abundance of these metals in the Earth's crust. Even in the 20th century, during normal economic conditions, this ratio stayed between 30.1 and 50.1. But today, it's hovering near 80.1, an extreme level that has only happened a few times in history. And every time the ratio gets this high, silver doesn't just rise, it explodes. Look at the past. In 1980, the ratio hit 41:1, and silver rocketed from under $6 to nearly 50 in just a few months. In 2011, the ratio dropped from over 80.1 to 31, and silver surged from $9 to nearly 50 again. Today, we're back at extreme levels, signaling that silver is massively undervalued compared to gold. But here's where it gets even more interesting. This isn't just about silver playing catch-up. Historically, when the ratio reverses, silver moves twice as fast as gold, meaning that if gold rises 50%, silver could easily double or triple in price. With gold already pushing record highs, silver's next move could be one for the history books. And yet, mainstream investors are still asleep. They're chasing tech stocks, crypto, and government bonds, completely unaware that silver is setting up for its biggest bull run in decades. But smart money, the institutions, the central banks, the seasoned investors, they know exactly what's coming, and they're already making their move. So why isn't silver already surging? Because the financial system has a dirty secret. It has been suppressing silver's price for years. The big players on Wall Street don't want people rushing into silver, because when they do, it exposes one of the biggest manipulations in modern finance. And that's exactly what we're about to uncover next. How banks and institutions have been artificially keeping silver prices down, and why the coming short squeeze could send silver skyrocketing.
Metaphorical power, there's symbolic power. And do you know that in each one of our bodies here, that there's 0.2 milligrams of gold in your bloodstream? It's literally, viscerally a part of our natural lives. It is a natural asset. It is almost supernatural. And it's analog and not digital. That doesn't make it useless. It doesn't make it a pet rock. But look at what gold is telling us since we weaponized the US dollar in the wake of the Ukraine war, during the Ukraine war, to sanction Hitler 2.0 because we were saving democracy and Zelensky. Again, we can debate that all day long, but look what central bankers did, because if you had money in Citibank and they froze your account, would you recommend Citibank to anyone? Probably not. John Maynard Keynes said, never weaponize a neutral reserve asset, a world reserve currency. Robert Griffin came to Congress in the 60s, said, don't go there. Even Barack Obama, don't weaponize the dollar. That was Biden's boss. I don't know who Biden was getting directions from or who was making decisions in the last 4 years, but it wasn't a very smart decision. In fact, it was one of the stupidest decisions in the 248-year history of our foreign policy. We weaponize that dollar, and what does the world do? It doesn't trust it anymore. It's a weaponized dollar. You've broken the trust. And what has the world done? They've looked at the dollar differently. They looked at the U.S. Treasury differently. It is no longer a safe Tier 1 asset.
For decades, silver's price has been artificially suppressed by the financial elite. Banks, hedge funds, and institutional traders have been manipulating the silver market through a complex web of paper contracts, short selling, and price suppression schemes. They don't want the public to realize just how undervalued silver really is, because when silver finally breaks free, it will expose one of the biggest financial frauds of our time. Here's how it works. Unlike physical silver, which is tangible and finite, the paper silver market is built on derivatives, futures contracts, ETFs, and unbacked promises to deliver silver that doesn't actually exist. For every ounce of real silver in vaults, banks have sold dozens, sometimes hundreds of paper claims. This creates an illusion of abundance, artificially driving prices down. The institutions that control these markets profit by shorting silver, betting on its price to fall while using their influence to keep it from rising too quickly. But cracks are starting to show. The banking system is under immense strain. In recent years, major institutions like JP Morgan have been fined for manipulating the precious metals markets. And now, with global debt soaring and inflation ripping through economies, investors are waking up to the truth. The silver they thought they owned doesn't exist in physical form. A banking crisis could trigger a run on silver, just like a bank run. If even a fraction of investors demand physical delivery of their silver, the entire system could unravel overnight. We've already seen warning signs. Vaults in London and New York are reporting historically low inventories, while demand for physical silver is surging. The COMEX, one of the largest silver trading platforms, is struggling to meet delivery requests. When trust in the system collapses, paper silver will become worthless, and real silver will become priceless. And here's the kicker. Central banks know this. While they hoard gold, they've left silver largely untouched, allowing private institutions to control and suppress its price. But when confidence in fiat money crumbles, silver's role as real money will become undeniable. The institutions that once held silver down will be forced to buy at any price, igniting a short squeeze of historic proportions. But silver's banking crisis is only one piece of the puzzle. The second, equally explosive factor? Geopolitical chaos. Because when the world becomes unstable, capital rushes into safe haven assets, and silver is about to become a global lifeboat.
By the dollar, we're all the dog being dragged by the tail of U.S. monetary and fiscal policy because it's home of the world reserve currency. And what have we got in the home of the world reserve currency since the great Reagan to today? Well, 44 trillion increase in debt. Well, tax receipts are only up by 8x. There's a major imbalance. Our GDP is 1/3 of that. We're literally spending and borrowing and going into deficit at 3 times our income. Any corporation, family, frankly, or even individual would know that's unsustainable, and yet here we continue. As Neil Ferguson said, and as Colonel McGregor talked about this morning, the interest on our debt alone to pay Uncle Sam's IOUs is now greater than our military budget. And as anyone who studied history knows, it's ipso facto a sign of a dying empire. Probably more so than Justin Sun paying $6 million for a banana.
The world is becoming a powder keg of geopolitical instability, and when uncertainty grips the global economy, smart money doesn't stay in fiat. It flees to hard assets like silver and gold. We've seen it time and time again. Wars, trade disputes, political chaos. Each crisis fuels a rush into safe haven metals. But this time, the stakes are even higher. Right now, we're witnessing a perfect storm of geopolitical tensions. The US and China are locked in an escalating economic war, with tariffs and trade restrictions disrupting global supply chains. The Russia-Ukraine conflict has sent shockwaves through energy markets, and fears of new flashpoints, whether in the Middle East, Taiwan, or beyond, are rattling investor confidence. Governments are stockpiling resources, and central banks are hoarding gold at record levels. But they're not the only ones making moves. Retail investors and institutions are beginning to realize that traditional financial assets, stocks, bonds, even real estate, are vulnerable in times of crisis. Currencies can be devalued overnight, and entire banking systems can be frozen or seized, as we saw with Russian assets in 2022. But silver? Silver is real, tangible wealth that no government can print or manipulate out of existence. Historically, whenever global tensions rise, silver follows gold's lead, but with far more explosive gains. During the Gulf War in the early 1990s, silver spiked. After the 2008 financial crisis, as central banks scrambled to stabilize markets, silver skyrocketed nearly 500%. And now, with geopolitical uncertainty at levels not seen since the Cold War, the setup for silver has never been stronger. But this time, there's an additional catalyst that could send silver's price soaring to unprecedented levels: a physical shortage. Unlike gold, which is largely hoarded in vaults, silver is also a critical industrial metal. And right now, industrial demand is skyrocketing, while supply is shrinking. This isn't just a financial story, it's a supply and demand shock that Wall Street is ignoring. Next, we'll expose the silver supply crisis that could trigger the biggest rally in history, and why industrial demand is about to push silver into uncharted territory.
And I'm seeing a direction with almost scary conviction about where the world is going and where the gold price is going and where the gold as a preservation asset and as a strategic reserve is going. It's not by talking my book. Like I said, I came up during the dot-com era as a stock bond jock in a very supported, Fed-supported lottery ticket market for many years. It wasn't that hard. It was just a rising boat on a rising tide. But I am seeing a direction of the ball I want to share with you, because whether you're investing in precious metal equities or direct physical metals, you need to not speculate, you need to have conviction. And again, what I've learned is conviction in the space, and it's based on seeing the direction of the various balls, about 6 or 7 balls that I want to share with you so that you have this conviction as you leave this room. Many of you probably had it when you entered. And the first ball is the most obvious ball that leads to the discussion on gold, and that's the dead ball. This is the lie of omission that doesn't make the headlines as much as it should. It certainly wasn't discussed much in the polarizing debates of Labor and Tory or Republican and Democrat. We're looking at $400 trillion plus the next few years in global debt. Of course, the U.S., like Canada and many other countries, all other countries, all the major countries of the world are drowning in debt. But in the U.S., its fiscal year starts in October. So already in October and November, the numbers have come out. We're running a $690 billion deficit in the first 2 years alone. When December comes, it'll probably be over $1 trillion. We're just not even into the first quarter of our new fiscal year. That's the kind of spending and deficit spending we saw during COVID. And
For years, the paper-silver market has masked a disturbing reality. There simply isn't enough physical silver to meet demand. And now, as investors and industries alike scramble to secure real silver, we're heading straight into a supply crisis that could ignite a historic price explosion. Here's what the banks and mainstream analysts won't tell you. The world is running out of silver. The London Bullion Market Association, LBMA, and COMEX, two of the largest silver trading hubs, are reporting critically low inventories. Vaults in London have seen their silver holdings drain at an alarming rate, and COMEX, which operates on a system of paper-silver contracts, has been experiencing surging requests for physical delivery, something it simply cannot sustain. And then there's the short position. For every real ounce of silver in existence, multiple paper claims have been issued against it. This means that if even a fraction of traders demand physical delivery instead of settling for paper contracts, the system could implode. The result? A short squeeze unlike anything the precious metals market has ever seen. We've seen glimpses of this before. In 2021, the Reddit-fueled silver squeeze movement attempted to expose the artificial suppression of silver prices, leading to a massive spike in physical demand. Dealers around the world ran out of inventory, premiums surged, and major banks found themselves in a desperate scramble to cover their shorts. But that was just a warning shot. This time, the fundamentals are even stronger, and the squeeze will come not just from retail investors, but from institutional buyers, industrial users, and central banks racing to secure dwindling supplies. Because unlike gold, silver isn't just a monetary metal, it's a critical industrial resource. And that's where the next phase of the silver crisis begins. With industries like solar energy, electric vehicles, and advanced technology consuming more silver than ever before, and mining output failing to keep pace, we're heading for a severe supply crunch. Next, we'll break down how industrial demand is about to push silver past its breaking point, and why the coming shortage could send prices into uncharted territory.
more conservative thinking, a lot of it's just because most of the people are broke. We've got a very polarizing election, and tomorrow when you're president of the United States, I don't need to speak about that. Could be sublime, could be ridiculous, we'll see. As Colonel McGregor was talking this morning, we also have military tragedies, hundreds and hundreds of thousands of dead in the Ukraine, what could be considered an avoidable war. That's very debatable, but nevertheless, we also have serious questions about whether Zelensky is George Washington 2.0 or Putin Hitlerized 2.0. I'm not going to solve that problem today, not going to talk about it, but it's certainly a tragedy. It's a tragedy in the Middle East. It's a tragedy that the red line in the South China Sea is getting fatter, and we're actually considering a nuclear option. Probably not going to happen. It's mutually assured destruction, yet it's still madness. But all of these things are very polarizing, very debatable, certainly madness. But you want an example of something that I want to set off with to show how mad the world is. It's almost comical. And the example I came up with on my way over here, flying in from Europe, was I was thinking about this punk, Justin Sun, crypto millionaire. I don't know if you know the story, maybe you've read about it. There was an auction at Sotheby's for fine art. Modern art is a very questionable topic. We all have our tastes. But a 35-cent banana bought on a Manhattan street that morning was duct taped to a white wall at Sotheby's, and the auction began. And Justin Sun, this crypto genius, decided after fees to pay $6 million for a banana just to show the world that he could. Meanwhile, farmers in France, where I live, or the Netherlands, are committing suicide at the highest rates because the European commissioners who gather in Brussels just voted themselves a 15% pay raise despite being a layer of parasitic spending on Europe. The U.S., from Portland Square, or Pioneer Square in Portland, 3rd Street Promenade to New York City, to Minnesota, the Midwest where I come from, the middle class is literally the working poor. And Justin Sun is buying a banana for $6 million and digesting it the same day just to show that he can. If you ever needed a comical indication of a late-stage empire or fourth turning, it's that crypto millionaire. But what does that have to do with gold? How can gold solve all of these problems? It can't. It can't solve human arrogance.
Silver isn't just money, it's an irreplaceable industrial metal. And right now, demand is surging at a pace the market simply can't handle. While investors focus on silver's role as a safe haven asset, the real supply shock is coming from the industries that need silver to function. Take the solar industry, for example. Silver is a key component in photovoltaic cells, and with the global push for renewable energy, demand is skyrocketing. In 2023 alone, solar panel production accounted for nearly 20% of total silver consumption, and that number is only rising. Governments around the world are pouring hundreds of billions of dollars into solar energy expansion, but there's a problem. There isn't enough silver to meet this demand. Then there's the electric vehicle, EV revolution. Every EV requires 2 to 3 times more silver than a traditional gas-powered car, and as automakers shift production away from internal combustion engines, silver consumption is surging. Companies like Tesla and major automakers are scrambling to lock in supply contracts, but with mining production struggling to keep up, shortages are inevitable. And let's not forget 5G technology, semiconductors, and medical applications, all of which rely heavily on silver. The world is becoming more technologically advanced, and silver is at the core of that transformation. But unlike copper or aluminum, silver doesn't have a viable substitute. When supplies tighten, industries won't just cut back on silver use. They'll be forced to bid higher and higher to secure what's left. Meanwhile, silver mining production isn't keeping up. Years of price suppression have discouraged investment in new mines, and existing reserves are being depleted. Major silver-producing countries like Mexico, Peru, and China are seeing output stagnate or decline, meaning that while demand is exploding, supply is shrinking. This creates the ultimate setup: a market-wide supply deficit, surging industrial demand, and a financial system that has drastically underestimated silver's importance. Once these industries start competing for the same limited physical silver that investors are hoarding, prices could go vertical. And that brings us to another crucial factor: retail investors. Because while institutions and industries fight over physical silver, everyday investors are waking up to silver's true value. And when the masses move in, it will be too late to buy at today's prices. Next, we'll dive into how retail investors are fueling silver's next breakout, and why the shift in public awareness could send silver soaring.
That dilution, as you already feel, regardless of whether it's CPI or the PMI or the PCE inflation measurements, which are pure fiction, and everyone on Wall Street knows that. But that inflation, that currency risk, is an invisible tax on you, the sucker for the criminal negligence of your central bankers and policymakers who habitually, chronically, pathologically overpromise and underdeliver, and whatever the delta is to what they promise and can't afford, they pay for with money created out of thin air. And guess what? The one who's paying for that is you. Because inflation is a compounding force. Never underestimate the power of compounding interest or compounding inflation. It is absolutely destructive, and everyone here, regardless of your income, knows this. This takes us to another ball, scarier ball perhaps, the geopolitical ball. Again, I can afford to be biased. I'm an American, very proud.
For years, silver has been the most overlooked asset in the financial world. Wall Street has ignored it, the media has dismissed it, and institutional investors have treated it like an afterthought. But now, retail investors are waking up. And when they move in, the silver market will never be the same. We've already seen what happens when the public realizes an asset is undervalued. In early 2021, retail traders on Reddit's Wall Street Bets launched the Silver Squeeze, an attempt to expose the price manipulation in the silver market. Physical silver demand exploded overnight. Dealers ran out of inventory, premiums on coins and bars skyrocketed, and banks were forced into damage control. But that was just the beginning. Fast forward to today, and the conditions for a full-scale retail silver rush are even stronger. Inflation is eroding purchasing power, distrust in banks is at an all-time high, and everyday people are looking for a way to protect their wealth outside of the traditional financial system. And silver? It's still sitting at a fraction of its true value. But here's what makes this different from past silver spikes. This time, retail investors are stacking physical silver, not just paper contracts. Be so conscious. They aren't buying ETFs that can be manipulated by the banks. They're demanding real, physical silver, coins, bars, and bullion, removing supply from the market and creating a squeeze that Wall Street can't control. And they're not alone. The demand for silver from sovereign mints is breaking records. The US Mint, the Royal Canadian Mint, and other national mints have struggled to keep up with demand, with silver coin sales far exceeding previous years. This isn't speculation, it's a fundamental shift in market dynamics. As more investors wake up to silver's potential, the supply-demand equation is becoming unsustainable. When retail demand collides with industrial shortages and institutional panic, we could see a surge unlike anything in silver's history. And that brings us to the final catalyst, the moment when all these forces converge, triggering a silver explosion that will rewrite the financial landscape. Because it only takes one event, a banking collapse, a currency crisis, or a central bank policy shift, to set it all in motion. Next, we'll uncover the trigger that could ignite silver overnight, and why the biggest gains may come faster than anyone expects.
They prefer gold over the most important 10-year bond in the world. Why? Because they've lost trust, out on a weaponized dollar, but they've lost trust in an IOU from an issuer that is literally quantifiably broke, and they don't trust it anymore. That's why we're stacking gold all over the world. And so, you look at the gold vault. Oh, I gotta go backwards. You look at that graph on the Treasury, but some would say, gold's just too expensive. I missed it. It's overpriced. In a bull market, it's topping out. That is a complete fundamental misunderstanding of gold. It's a misunderstanding of inflation. It's a misunderstanding of price moves. It's a misunderstanding of history. Now, no one seems to mind. I'm not here to criticize crypto today, but crypto went to 100% in 60 days. It's $100,000 on its way to $100,000. No one seems to mind that. That's not astounding. Gold at 2,700 seems too expensive. Well, federal debt is up 4,000%. Gold's only up 226% since, 1980. 226%. We're wondering if it's too expensive. And free money supply is up 1,300%. The median house price in that same period is up 500%. Yet we're talking about gold at 2,700 range being too expensive. We missed the boat. In fact, in inflation-adjusted terms, gold has over 20% just to reach its 1980 highs. And when measured against the broad money supply, the M2, gold is as cheap today at 2,700 as it was in the 1970s, at less than 50. So now you haven't missed the boat. Gold's not too expensive. And yet that's the talk. RAs, the Registered Investment Industrial Complex, Wall Street, where I come from, gold's too volatile. They don't talk about it because gold is...
All it takes is one event, one shock to the system, to send silver skyrocketing overnight. The pieces are already in place: the debt crisis, inflation, supply shortages, and rising demand. But history has shown that markets don't always move gradually. Instead, they erupt when a single catalyst shatters investor complacency. So, what could be the spark that ignites silver's biggest breakout in history? One possibility is a banking collapse. We've already seen cracks forming in the financial system, with bank failures making headlines and liquidity crises spreading behind the scenes. If another major institution falls, conditions, one too big to bail out, panic will set in. Just like in 2008, money will flood out of banks and into hard assets. And while gold will rise, silver, historically more volatile and undervalued, could see an even bigger surge. Another potential trigger? A currency crisis. The US dollar, euro, and yen are all facing mounting pressure. If faith in fiat money collapses, whether due to excessive money printing, a sovereign debt default, or even the rise of alternative global currencies, silver's role as real money will become undeniable. Then there's the Federal Reserve, a policy reversal, where the Fed is forced to pivot back to money printing and rate cuts, could set off a silver explosion. Markets have been clinging to the illusion that central banks can control inflation while keeping the system stable. But when the Fed is forced to choose between crashing the economy or inflating away debt, we already know which option they'll pick. And when that pivot happens, silver will be one of the biggest winners. But perhaps the most unpredictable trigger is geopolitical chaos. War, trade disputes, or economic sanctions could disrupt global supply chains and accelerate the flight to safety. The moment confidence in traditional markets is shaken, silver will become one of the few remaining lifeboats in a sea of financial uncertainty. The truth is, we may not know the exact moment silver will break out, but we do know that all the conditions for an explosive move are already in place. When the dam finally breaks, silver won't just rise, it could gap up violently, leaving those who hesitated behind. Which leads to the final question. Are you positioned ahead of time, or will you be watching from the sidelines when silver makes its historic move? Next, we bring it all together. Why silver's coming breakout isn't just likely but inevitable.
But very embarrassing at the same time. Let's not kid ourselves about American foreign policy. We could spend an hour on each of these pictures. And I'm a patriot, and I come from a family of soldiers. But look, again, I'll say about the military, they are lions being led by donkeys. So when I criticize American foreign policy, I'm not criticizing those in uniform. But look, Iraq, Libya, Syria, Ukraine, which of course is just an indirect war that the U.S. is waging, Afghanistan, Israel, etc. Freedom and democracy has not been spread there. We typically, as McGregor said, bully, come in, bribe, bomb, and then gently leave, leaving a wake of sorrow and death in our wake. And again, I could spend all day on geopolitical risk, but it's an undeniable problem. And what will happen when the Ukraine war ends is BlackRock will come in and build and make a fortune, just like Halliburton did after Iraq. And men I went to school with are still buried in the cemeteries outside of D.C., and I try to visit these once or twice a year. So, geopolitical risk is very real. But then we get to the ball that's probably the most important, the ball that I'm here to talk about, which is the golden ball. And gold is fascinating to me. I was listening to Frisbee and Alistair McLeod in Europe talking about gold, and David Frisbee had this. It's really fascinating how gold even came to be. It's interstellar collision of these rocks. It's older than our solar system. It's been money since 500 years before the birth of Christ, and every major religion, Judaism, Islam, Christianity, gold and silver are discussed.
Silver's moment is coming, and the signs are impossible to ignore. The world is drowning in debt, central banks are trapped, inflation is eroding the value of money, and industrial demand is surging beyond what the market can supply. At the same time, faith in the financial system is cracking, and retail investors are waking up to silver's true potential. We've seen this setup before. In the 1970s, in 2008, and again in 2011, silver didn't just rise, it exploded. Each time, the same ingredients were in place: monetary instability, a rush to hard assets, and a supply squeeze that left institutions scrambling. But this time, the setup is even bigger. The gold-to-silver ratio is at historic extremes, signaling that silver is massively undervalued. The physical silver market is being drained, with vaults running low and deliveries becoming harder to fulfill. And once the trigger event, whether a banking collapse, a Fed pivot, or a geopolitical shock, sets off the chain reaction, silver won't just move in small steps. It will gap up violently, leaving latecomers chasing higher prices. So the question isn't if silver will break out, it's how high it will go. Will it stop at $50, its previous all-time high? Will it reach its inflation-adjusted peak of $150? Or will this be the moment silver finally breaks free from decades of suppression, launching to levels no one thought possible? Smart money isn't waiting to find out. Institutions, sovereign mints, and retail investors are already stacking silver, preparing for what's ahead. Because when silver really starts moving, history shows it moves fast. Now, it's up to you. Will you be ahead of the curve? Or will you look back and realize you missed one of the biggest opportunities in financial history? Make sure you're prepared. And if you found this insight valuable, be sure to subscribe so you never miss the latest on silver's next big move. And remember, this is not financial advice. Always do your own research and consult a professional before making any financial decisions.
Regardless of your income, you can all afford an ounce, a gram of gold, and you should. And when it comes to not just understanding why you should have gold, but we at Bond Graders understand very clearly is how you should own it. And one thing you should not do is keep it in the very banking system that you're trying to avoid the risk of. That includes paper gold, ETFs. It's just a daisy chain of intermediary banks. If you want to hold gold to be free of the system, of the digitalized blockchain mutable ledgers that's coming, you got to have your one real asset, physical gold, outside of that banking system. And you want to have it, I think, in a jurisdiction that actually sees gold as a protected asset, and on a relative, not absolute basis, actually protects your privacy. Switzerland has some problems, but on a relative basis, there's no better jurisdiction in the world for that type of ticket, that type of purchase. Insurance matters, we're insured through Lloyd's. Logistics matter, being able to move that gold from anywhere in the world, whether you're buying or selling, whether you're in Australia or whether in Rhode Island. And of course, liquidity matters. And we have an in-house trading desk that gives you instant liquidity and wires in any currency you want, any bank account you want, when you need it. But like central banks in the world, you save in gold and you spend in fiat. And then, of course, there's the service. Our team, two of us are former bankers. We know how the banking system works. We know how the sausage is made. Actually, 3 of us, of our partners, are former bankers. 4, when you really add it up. So it's not just why you should own gold, it's how you should own gold. And for the larger tickets, we're there, but you don't have to go to Switzerland with a $5 million minimum or a $400,000 minimum to figure out how to hold your physical gold outside of the banking system. Because gold is the direction, not just tomorrow, already yesterday and today. That backswing has started. The ball direction is obvious, whether we the markets, the economy, the debt, the geopolitics, and the currencies, which are open and obvious. It's not even gold bugging, folks. It's just common sense. And I hope this gave you more conviction not to speculate in gold, but to believe in gold. Because it is a